we're moving into, 2025, finally, we're moving into it, having our own AI platform, so you all have your own AI to navigate, and we're going to empower co-leadership. So what you, Erica, and you did in Seattle with us, can happen, like what you're doing around our briefings. It could be enhancing what you're doing at the Rainier Club with that October 6th event, right? 6th, do I remember correctly?
That's correct. It's Monday the 6th.
So again, we want to help each other in your platforms as we interconnect our platforms. So I look forward to, so Walter's got another group from the Rainier Club joining us. It won't be just him and where he is. It's going to be like our watch party for our 200th and 150th. It'll be an every week thing.
Awesome.
I like that.
Awesome.
We'll have to figure out how to navigate who talks and who asks questions, but we'll figure that out. Okay, so with that, you'll see now how I do these Zooms. All these people in the waiting room, you have to like, let in, not let in. You're gonna see the sausage making happening right now. All right, go for it.
Okay, so can we go back one slide and we'll get started? No, the other way.
Yeah.
So next Tuesday, we have a call with Ed Yardeni. At the beginning of the decade, in the beginning of the 2020, he said that the S&P was going to hit 10,000 by 2030. So we want to go over his roaring 2020s forecast and give an update at the halfway point. It'll be a fascinating discussion. If you sign on, I'm going to put the link into the chat when I'm finished my remarks during the Q&A. If you sign up and can't make the call, then we'll automatically send you a replay, or you can go to our firm's website and see it after. We'll post it within 48 hours. So thank you for that. And then we'll jump into today's discussion.
So see, this is me letting people in,
Yeah.
and I'm getting all these WhatsApp messages. That's what I do. Like, why am I not in? Okay, it's on you.
Okay, so we talked a lot about the last couple of weeks about the U.S. economy and all the drama that's going on with the U.S. and tariffs and all that. And people are struggling with my positive views on the U.S. economy, which I think the U.S. is absolutely fine right now economically and relatively strong, particularly in comparison to other leading economies, which is why I want to touch on Germany and China today, because they're the two biggest manufacturing economies in the world, the best manufacturers, and both are going through some real struggles right now. And I want to touch on both the positives and the negatives that are going on with each economy. So we go to the next slide, Mark.
Yeah.
When you look at the relative growth rates of the three economies, and I think this one, you can see how the EU has kind of been flatlining, China and the US going up. Jamie Dimon was speaking last week in London, and he said that relative to the Europe, they were at 90% of the US GDP about 15 years ago. And the policy decisions coming out of the great financial crisis have really led the two economies in very different directions. And now it's at 65% of the US GDP. So it's lost potential GDP relative to the US. And I think this is one of the challenges. And part of that comes from the fact that what their strength was, China moved into. So you can see the China growth and the flatlining of Europe is directly connected to the fact that in this case, China stopped selling T-shirts and started making autos and other high-end electronics and other high-end manufacturing goods going right into Germany's core. And you can see what the results are. So this is not a US challenge. It's not just a tariff problem. This goes back a little bit further. So if we go to the next slide, Mark.
Yeah. See what I have to deal with?
Yes.
You don't see.
I do see this.
Okay.
So this is actually an interesting slide. This compares the privately held companies valued over $1 billion in the US, China, and Europe. And you can see that just the enormous size and scale. And I always talk about follow the money. And you can see where the money is, where it's coming from, and where value is being created in the private sector here.
That is amazing.
It's
a tenth the size.
Yeah, and this is what I get pushback every time when I'm talking about this, and it's hard to put it in perspective. But if you go to the next slide, Mark, you can see this is a really interesting slide. This is public companies started from scratch, less than 50 years old, okay? And they only had the chart for the US and the EU. And Stripe is actually in would be in the private sector. That was in both sides. But in the public side, look at the scale. And what's happening right now and really challenging Europe is many companies are relisting from Europe to the US to get access to the capital that you're seeing here, which further worsens the problem for Europe, particularly with some of the other challenges they have. So it's a fascinating way to look at the size and scale and what's different. So when I'm talking about where I'm coming from about the differences, I'm looking at it from an economic
So we always
perspective.
talk about where the hockey puck is going. So let's just, if you extrapolate that couple, 2, 3, 4 years out, is this going to get worse and worse? It's
It depends. It depends.
For
is the answer.
Europe.
For everyone, it depends on the policies that are being put in place as we go forward and how we deal with the current situation, because we've been perpetuating the challenges in most of these regions. So I think that's what we have to look at. And I have a lot of slides today, so I apologize.
Okay,
This is going to go a little bit long,
keep
so
going.
we're going to keep moving.
Keep it going.
It also gets to R&D and where the spend's going on R&D. And again, look at the differences between the leading economies. And this speaks to why China's doing so well. And this really is the battle that's going on around the world. It is a US and China battle, and how everyone else falls out and falls in with that is really going to be what the play is here. And the difference too that I want to point out between the US, China, and the EU is in the EU, it's a lot of little efforts. In the US and China, it can be bigger efforts directed by the scale of the economies, where we don't get the scale in the EU of the union because they just haven't played to their size. So we go to the next slide.
Actually, you're not in charge.
Okay.
You take,
We can switch seats.
You take control.
Thank you. So the other thing is following the money. Look at the sources of foreign direct investments. And here you can see the top 10 on the left side, and China and Germany are not there. They're on the other country's side. And you can see for the last couple of years, they're in negative flows. And the US has been a big recipient of that. And I got this question the other day about actually Sunday about the flows in China taking all their treasuries out. Interestingly, the May report from the Treasury shows that that we're up in foreign direct investments considerably, both in the bonds and in equities. That I believe China is only down about 10 billion or $12 billion in the last 12 months. 12 months, okay? And we're up, I think, $200 billion in treasury flows in that time. So we are not seeing outflows, we're seeing inflows into the US continuing. And I think when you have reshoring, when you have some of the trade deals that are going on, you'll see additional money coming in. And it wouldn't surprise me if treasuries are a part of the negotiations with more friendly nations as we define them today. And that Canada, for example, with all the tariff fights going on, I think they increased their treasury holdings by 40 or 50 billion in May. So don't get sucked into the headlines is really my point. And this is where the politics, I think, is overriding the realities. And we have to be really careful about following data points or the headlines. So let's get to China and Germany, and I'll start with Germany, what's working, what's not, and so show you some charts around it. But clearly what's worked for them is they are incredible at manufacturing and engineering. Now they have a renewed focus on competitiveness, which is great, because they released the debt brake and are now really focusing on their defense spending. That's going to help, but it has to be affected. And now we're starting to see some of the challenges that Germany faces when you have a really good idea and a good opportunity. Can you get everyone on board to get behind it? So what's not working for all of Europe, but also particularly for Germany as its leading economy, is the lack of a fiscal union. It's hard to get the scale and compete globally if you're not in that spot in the right form. So that's one. The other is, and it's an old industry economy. The world is moving to advanced technologies, and Europe has not been leading it, nor has Germany. They're getting hurt by their other issues. But I think the real issue for right now, where I think Germany has to make a decision is, will they really release the debt brake and aggressively use the fiscal spending that they can put out to drive their economy forward, or is their government going to get in the way? And they had a vote for a nomination for a judge that was more on the liberal side, and that actually damaged the center coalition to now where it's fragmenting, and Merz is looking at, is he really going to be able to drive things forward? And then you have the far right really looking at this as an opportunity to divide the middle and create really what they'd like to see, the far right in Germany would like to see what we have here, the far right and the far left really driving everything. And that's not going to be what's good for the German economy, I don't believe. It's not going to be what's good for Europe, but that's an issue. And the last issue on Europe really is productivity is lagging considerably against the US and particularly in Germany. So we'll get to the next slide. Here's just a look at their exports going back to 2011 for the China, US, Euro area, Germany, UK, and Japan. And as you can see, this is not actually going the right way for Germany, really going well for China until now. But a lot of what China's gains are have come off the back of the Germans. So that's really initially was the US. More recently, it's been the Germans and other areas as well. But optimism is high because the spending plans, it's a question of can they match up to those spending plans and execute on it in the way that they need to. And businesses need to see a roadmap. You have the energy issues that are weighing on the system. Can they move past it is one of the issues we're going to have to see. But that optimism has to be taken advantage of, and the government has to back it with policy actions that drive the economy forward, because the lack of competitiveness has been clear for Europe for some time. And with Germany being its leader, it has to lead. And I think that's going to be one of the issues that you're going to see challenging Europe going forward. They have to come together and they have to get scale, and they're not doing that right now. So if they can release the debt brake and get the spending going, get the focus going, that'll help. But they have an energy issue and they have population issues, and I think they have political issues that they're going to have to work through. So let's switch gears to China. And what's working for China, we know they've been an economic miracle for decades. Their choice of an alternative to the West, particularly to the US, is appealing to a lot of nations, particularly those with autocratic and strong leaders. Their dominance in areas is well documented. It's actually one of the mistakes I think the administration made in their trade negotiations. When you put sanctions on a country you rely on for critical resources and you don't have the inventory for them, that's a problem. I think this is one of the interesting things, and just step back on China for a minute. Notice the change in tone from the President Trump in his negotiations with China versus everybody else. It's very respectful and conciliatory and not bullying, where everyone else, he's taking the bullying approach. And I think that's due to two things. One, he knows he doesn't have quite the leverage that they're talking about. They were shown that with rare earths. I think the other thing is, I think he actually understands that you need the US and China to find a better outcome for the global system to work going forward, and still find a way to compete and protect ourselves from them, because they are a threat from a national security perspective. But they're where they are in advanced technologies puts us on a collision course unless we set up guardrails, and I think that's going to be one of the big issues. The problems that they have are real on a secular level and on a cyclical level, but they have an ability to take a longer term view. And if they can keep their social stability and control, that will give them time to work through the problems. But they have a debt problem. They have I think their biggest problem, and I'll show you in a minute, is their excess capacity and how they deal with that, and the weak domestic demand. So let's get into that for a minute, because population, we know the problem there. You can see their GDP is naturally in a decline from the tremendous growth they had in the early stages of their phenomenal run. But now they're really hitting a more difficult run here. And is the 5% a good number or not? Nobody really knows, but I wouldn't count China out. I wouldn't be too pessimistic about them or too optimistic. It just depends on how you want to play it from an investment perspective. But here's the real issue for the globe right now. When you look at this chart of China's manufacturing, it is 2.5 times what NATO's manufacturing workforce combined is. So this is the problem for the rest of the world. And this is where China is exporting a big problem on the global system in terms of deflationary pressures. But it's not just a problem outside of China, it's a problem domestically as well. And President Xi right now is going after the manufacturers who are just in a price war down to zero and making it very difficult to turn the sales that they have into profits. And there's a real issue now coming for China with Trump's tariffs, where I believe that there are certain industries that 40% tariffs will wipe out the majority of those industries, because the profit margins are so low on those industries to begin with. But this is a real issue that you can see. China is also facing significant deflationary pressures, as I was just touching on. And this is a big problem that deflation is very difficult to reverse. And they've spent a lot to get where they are, and they're highly indebted. So when you have a deeply indebted system in a deflationary mode, it's very hard to add a lot of debt to get out of that problem. Particularly, they need buyers too. But this is where their dominance is. This is where their strengths lie, and don't count out all the tremendous successes that China has for all their secular and cyclical problems. They are a phenomenal economy that can do a lot of things if they get it right. Similar to the US, all these countries have problems. And when we're talking about the US's problems or Europe's problems or China's problems, it's really all relative. And we need to keep that perspective a little bit more when we're having our discussions and making our investment decisions. Mm-hmm. So I think in closing, what Trump's done is really upended the way we think about the world. And I think what you saw, the way China reacts, is really taking a step back. And I think it's the way many people should react to what's going on in the world today is don't react to the headline, give it a chance to breathe and see where we're actually going to go with what's going on. Because I think, and I get caught up in this every week when we're doing these presentations, is you have something that comes out and it's so emotionally charged and it's so unorthodox from what we're used to that you then sit there and say, that's crazy, how can you do that? But he does bring some of the stuff back. He doesn't always get it right. He's sloppy and it's messy. But the best way to deal with this is to do what China's doing, is be patient, step back, and have a clearer view of what's going on. We still don't know where tariffs are going to end up. We don't know where the geopolitical situation is, but we do have better clarity on the tax bill. So that starts to ease some of the issues for investors, and we chip away at some of the uncertainty. Some of the tariff issues are going to be less uncertain as we move forward, and that'll allow us to start to make better investment decisions. I think when we think about the world today, productivity is what's going to drive us forward. It is the answer to the structural growth challenges. It's one of them. Fiscal discipline is the other one, and it's needed around the world. The balance, though, of fiscal discipline against the needs of the population is, I think, where we get a little lost on these calls, Mark, is we're so worried about the people that are getting hurt that we can't see straight for the goods that are coming out of some of the things that are going on. And it goes back to globalization in general. It's taken over 2.5 billion people out of poverty. There's still a lot of problems out there, but 2.5 billion people are better off than they were before. So we have to keep perspective, I think, in the broader picture. I think the Fed independence issue is going to be probably the predominant issue for this quarter. I looked last night, I think there's a 2.67% chance of a cut this week.
What percent?
2.76 or 2.67%.
That's huge.
Yeah, and 57% in September.
Okay.
And this is where the heat's really starting to pick up. I do believe Yellen and Bernanke had an interesting op-ed in the Times today on the importance of Fed independence. I think it's a global problem, not a U.S. problem. This is where the U.S. sneezes, the rest of the world catches a cold. It'll happen first in the currency markets and then in the fixed income markets. And that's one of the challenges for us as investors today, too, is the stock market's sending one signal, the bond market's sending another one, and rationalizing the two of them is a bit of a challenge right now. And I think that's in part because of the distortions that have gone on around tariffs. And you had trade activity that's completely unnormal for what these periods of time are, where we had pull forwards of demand to get ahead of the tariffs. Then after the negotiations with China, you had a big purchase of rare earths from the US. So we're not seeing normal flows. So you have to be careful with looking at data points and step back and look at the data. But when you step back for all of this, for me, in periods of this level of uncertainty and lack of clarity, go to the areas of required spending because you know money is going to flow there. And for right now today, for all the problems of the world, that's the electrification problem that we've talked about. The world needs to power up better. It's Europe's probably biggest challenge, I think, today is powering their system. I think you have the reindustrialization to the Midwest, I think, is a big deal. I think the U.S. Midwest in the U.S. is one of the best emerging markets in the world with the Gulf region as well. And I think this innovation and productivity we keep seeing it and see how it's changing our lives, but then we go back to the problem of today, and these are the solutions for the future. And I think it's hard to balance those things off. But when I look at it, the required areas of spending, how we get better productivity, how we power up the globe, how we get the AI to solve some of the problems that we have without destroying us, I think those are the areas that we're going to make money and mark as we go forward. And then obviously national security. So a lot to cover. We can open up for all the questions and. How you want
You said if you're gonna have my computer, you have to admit people.
I did. I
Okay.
just didn't get them all.
Okay. Okay,
It's multitasking.
Tim's got his hand up.
Go ahead, Tim.
Hey, Steve, I couldn't tell from your presentation when you were talking about China's emergence of as a manufacturing force, whether that was a bigger problem for Europe or the United States or about the same. Is there a
It's actually a problem it's a problem for Europe. It's a bigger problem for Germany because they're such a strong manufacturer. I think it's a less of a problem for the US because what's coming back to the US will be things that either we need to have here for national security or we were going to not be able to rely on China for anyway. And I would just say the last point on that is, Tim, is I think it's a problem for China because China's having massive deflation and they're actually going after companies to be more rational in their pricing, because if you're just racing to the bottom, they're never going to get the returns that they need to grow. And I think it'll actually strengthen their stock market too when you have more rational profits in their manufacturing sector.
Thank you.
You're welcome. Who's up next? I gotta get out of this. 1 sec. I can't see who's up. Stop sharing. I'm sorry, I can't see who's up next. Does someone have a question?
Stephen, it's Miriana. Thank you for this.
Yeah.
Do
Thank
you
you,
have any data, great presentation as always. Do you have any data on impact on existing businesses, large businesses in specifically hardware tech that produce in China? So for example, obviously Apple produces lots of things in China, everything that is produced there. So what is the impact of these tariffs on them right now?
Too hard to tell. Goldman is trying to figure out. I think Goldman put out a report and said that the exporters, their projections of the exporters will eat 20%, the company importing will eat 40%, and the consumer will end up eating 40%. I also think the question you asked, Mariana, is one of the issues that people are really struggling with now because we haven't seen inflation come through from the tariffs yet, in part because people had pulled forward demand, and we have inventories we have to work through. So I don't think we actually know the effects yet. And the other thing is, remember the Fed cut 100 basis points in the second half of last year. At those that cuts take about a year to work through the system. So some of the strength we're seeing that's offsetting it, some of the inflationary pressures is what's been done in the last 12 months. So hard to see it yet. I think we'll see it more in the next quarter. So Wanda?
Thank you.
Wanda,
Reflection. Thank you, Stephen. So when, in the name of this, keep the perspective, when you showed this slide about how concentrated industrial power is in the US and those larger companies, I couldn't help but recall somewhat similar slide from 50 years ago when Chile moved through Pinochet reforms after Allende, and 75% of Chile wealth was concentrated in the hands of 20 families. Moving on, Milton Friedman, who helped Pinochet to create the constitution, created free market. We can argue academically how free it was. Free market in which education is not the human right, but commercial commodity. And I stick just to education, will not touch on health. So today, 50 years later, the education is so prohibitively expensive that Chile is struggling with innovation. On the Global Innovation Index, Chile is, I believe, in the middle, which is not in line with this short-lasting growth under Pinochet and Milton's philosophy. So I don't want to draw parallels, but I think we are all familiar with the social pressure and tensions and event of 219. So in the name of taking the perspective, I think short term we can look into those tremendous opportunities. But I think we cannot forget about underlying social tensions that will be impacting investment decisions as well. Thank you.
I agree. I think Bruce is up next.
Bruce?
Yeah, Stephen, you talked about the demographics in both Germany and China. Germany can do something about it with immigration. China really can't. And so I'm surprised that you didn't put more emphasis on that. It seems to me that the demographic issue in China is going to be the story over the next decade or two. And I don't think there's any way out of it. So, I mean,
Yeah,
it seems like a bullet train heading for a brick wall.
Actually, I had a slide that would show the decline of all the populations by 2021 from 2023, and China is down 53%, so it is bad. Europe could, but I don't think philosophically or politically right now they will, because they have a very anti-immigration bias overall right now in politics in Europe as well. And you also actually saw that as an issue in Japan, ironically, where they have a terrible population problem, and in their election, immigration was an issue as well.
Yeah.
So it's their social issues that go against the immigration issues as well that Merkel got skewered for promoting immigration.
Reminder.
But that can change in a heartbeat. I mean, even in America, there was some recent Pew studies that showed month over month, the American approach to immigration is changing more favorably. And so that can change really quickly in Germany, but it can't change in China because they're just not open to it. I was in Japan recently talking about how in North America, a lot of individual wealth, the majority of individual wealth is in the value of their home. In China, the home is worth nothing because they got 5 million empty houses in Japan, and they're going to be doing the same thing in China.
So two things on that. I'm with you. And we should all remember that we're all immigrants, basically. Sometimes we forget, but on China, and then we'll go on. Francis, you haven't weighed in, and because he's sitting in Shanghai, and he's been on our Zooms but every time I put China in the headline, you do show up. Thank you. So
Can you correct me now?
You can correct Stephen, and on whether it's Bruce's question or other points you want to. Love for you to weigh in on China today.
A couple of things. Thank you, Mark. A couple of things that I take into account is the systemic problems in China, and that would be starting with the whole social contract that the CCP has with the society here, and whether or not that type of social contract is one that will yield any type of investment return. And I think what we're finding right now, particularly over the last, I'd say 10 years, is that the party's focus on security and control is paramount to any other consideration. And so this is a destabilizing factor in the economy, and is, I think, just sort of a fundamental tenet of what's wrong here is that the entrepreneurs don't feel comfortable. They don't think that they're safe. And so these systemic problems, we're talking about real estate overcapacity, we're talking about profitability not in so many companies, that to me they are killing the goose that has laid the golden egg. And so I'm actually quite negative on where things are going right now. Much more negative than Stephen.
But what, I like bulls and bears. So what makes you bullish? Like you're you're still in China. So obviously that's where your business is. But what gives you, what's the most exciting parts of China today?
Well, the first tier cities have fantastic opportunities, and they're creating some formidable economies in the first tier cities. And from a supply chain perspective, China will continue to play a fundamental role in supply chains going forward. There's no doubt about that. Whether even if the tariff rates remain at 55%, for particularly like anything that's low volume, high mix, will continue to have to go through China, just because the world's manufacturing capabilities in those low volume, high mix areas is just not going to be able to keep up. And so prices may increase, supply chains will get rejiggered, and so you see the explosion of growth in places like Mexico and Vietnam and Thailand. And so what keeps me here is, as a consulting practice, we are helping people rejigger their organization so that they can deal with the complexity of this environment. And so for me, it's a business opportunity.
Okay.
Actually, it's interesting what you're highlighting, because I think the change from t-shirt manufacturing to advanced technologies is a big deal, and how it impacts the whole world is rejiggers other countries' economies. It's not an insignificant shift, and it happens so fast that it's hard, and such scale that it's hard for people to react to. They were just talking about the U.S. plants that they're putting up now. You go in, I think there's like 12 people working in a lot of plants, and it's all robotics now. So it's not the manufacturing reshoring is not going to lead to job growth. It's going to have to come from new industries and new things being created. So it's going to be fascinating.
Right before we switch off China, Joel, are you there?
Yeah, I'm here
You just came out of, how long you were in China for how long?
for about a month. Yep.
What were your reflections on China?
Innovation is what strikes me, and just that China is continually seeming to leap ahead. I read from Adam Tooze about China now attempting to own 50 meters and down, and all their work in drone technology, air taxis, certain things that just seem to be leapfrogging again from an innovation standpoint. I also noticed I went up to Jiangsu during my visit to visit family, and compared to my trip last year, it felt like 90s China again to me in that region. Walking through a park filled with senior citizens, grittier, more advanced than it was in the 90s, but still feeling different in the north. And then
for some reason,
I guess just the other cities I traveled to, I just feel like there's this tension between the feeling of young people who don't feel they have the opportunities that they used to have. So I was I was really impressed with all the EV and infrastructure last year. This year I really felt like combination of things. Yeah.
You're rarely so negative. That was a negative point you made on China. And I never had a conversation with someone in China that was negative about their country. Are the youth somewhat open about that disgruntlement? That's a first. I'm picking up on signals. I may be wrong.
Okay. Well, I mean, I don't feel like I'm being negative per se. I'm just trying to be realistic with what I saw and with my background and anecdotally. I mean, I wish I had checked in with Francis in Shanghai, but I didn't. Hopefully I can do that next year. But nonetheless, I felt like I have a close friend in Shanghai who has gone through a number of different business iterations, and now she is focusing her business on senior citizens. She's opened up a studio where she's contracting with teachers, teaching dancing, all different sorts of things, and that's her focus, which seems really smart to me. But she tells me, many young people are just like, I don't want to bring any more kids into this situation. I don't want to procreate. They have the opportunity to have more kids, and they're just now choosing not to do so. But I feel like that issue is global. I think the whole world, there's population decline, and we have to try to figure out how we're going to deal with aging populations. I can share more, but I don't want to dominate either.
There's a article recently that you need MBAs are the new college grads in China, that just having a college degree still doesn't get you a job.
Germans are PhDs.
Yeah, it's very challenging.
All right. So, sorry, I've forgotten your name. CPU to you.
Clement.
Clement. Welcome back.
Thank you, Mark. Thank you for the great presentation. I truly relate with everything you said, and I appreciate your presentation. I'd like to digress a little bit. When I was growing up, my dad always said that when mommy and daddy are fighting in the house, it's the children that struggle the most. My question is, I know this conversation is about China, US, and mostly the European nation or Germany in particular. I'd like you to give me what's your insight when it comes to like Middle East and Africa, because we have other countries that are coming up like United Arab Emirates, which is a very good place for us to look at right now, or even the Saudi Arabia. What is your take on those locations, and what can we learn with the current situation now? So can you give us some of the insight on that?
Well, like some African countries, they're blessed. They're blessed with resources. And so what you have, like take a Jamaica, where we've talked about yesterday, is not so blessed with energy resources. So from that, they have they can diversify and do other things. I find it fascinating. We're going to be in Riyadh twice through the rest of the year. I do think, back to Africa, that's sort of like their backyard, and like they can fill a major gap, and they can actually make a lot of money with Africa together. I asked yesterday or 2 days ago provocative questions. What is really innovating here in GCC? And I think it's the people in the government. Maybe it's not hard deep tech like out of Stanford, Harvard, but it's I think their government. I mean, ours is okay. Maybe there's a method to some madness that we're seeing, but I don't think it's as much methodical. But I think China is very methodical. The GCC countries, very methodical. So I'm fascinated by, they have this opportunity, and the question is, what are they going to do with it? And they're recalibrating. And NEOM was, it's going to be 100 miles, not one. But that 1 mile, this, as Arish Turkey said yesterday, 2 days ago, even if we just accomplish a percentage of the goals, the aspirations, it's going to, that the people are, and she didn't move back. She was in the US. She's coming back to a country that's growing. And Dubai, they have good problems. And the immigration policy in Dubai is very different. Even Saudi, they're looking for talent. So I don't know if that answers your question, but we do intend to be in Africa 2026, and we'd love your help as we plan for that. Jonathan?
Thank you.
Canada.
I said thank you. Thank you.
Thank you. Yeah, Jonathan, your perspective?
Thanks, Mark. Stephen, I always enjoy your presentations.
Thank you.
We have announced trade deals with Indonesia and Vietnam. Several people think that's just a proxy for China. Do you think that it is going to make any difference in the presentation that you made about exports for China, to have Indonesia and Vietnam pushing their goods, China pushing their goods through those two countries? Or do you think we're headed towards another tariff tantrum?
I would be careful about the transfer of goods through other nations. The administration is very focused on that, and I think Vietnam got a taste of that in the first round of negotiations. I think that message was sent that way, so I think that is a potential risk. But I think you have to. I think their goal is going to be always to try and drive as much back to the U.S. in their policy. So I would be careful about going to the areas that you feel like you're getting a break, because China's manufacturing through them and over. I think they'll come up with a transfer pricing mechanism to capture that.
Thank you.
You're welcome.
Walter.
Hi, Stephen, thanks again for your presentation.
Welcome.
But this question is more for Francis and Joel. Guys, I'd like to get your perspective on the sentiment of the Chinese people about the economy and the struggles that they're having in China, yet China is still investing significantly abroad in Latin America, in Africa. They're spending an absolute ton of money abroad, and yet their economy locally is struggling. So how do the Chinese people feel about this, or does that even matter?
I wonder, Walter, whether or not people have really lost the ability for critical thinking on some of these issues, and partially because they don't have access to information, they don't have the educational training to really do the analysis, and also because the party has really delivered quite a lot over the last 20 or 30 years. So I still think that the average person on the street would give the CCP a pass. If you push on them with some arguments, and we have this game we play where we say there are 10 things China could do to make their life better, rather than worrying about the US being the boot on their neck. And I think when you have those types of conversations with people, and if they're open-minded about it, they realize that many of their pain is self-inflicted. And I don't know how much longer it could go on, but with the last time we had, someone like Mao in power, it went on for 15 or 20 years. So there's really not much alternative to the current state.
And would you say that that's the same with the business community? Because that's a little bit more plugged in globally.
I think the business community is of two minds. There are some people who are in the EV world who think that this is the place to be. And I think that's also true in a lot of consumer electronics. Joel mentioned the low altitude economy. There are certain areas where people have figured out that if the current administration has a certain policy towards favoring certain industries, then they're just going to, sort of pull up to the government trough and get their fill in that trough. And so that's one section. And I think it's kind of binary. I think the other side of it is people have, made enough money, and they're just gonna lie flat and ignore it. And maybe, like Joel's friend, they'll say, okay, I'll do something in crypto, or I'll do something in gold, or I'll like they're doing something that's a little bit offbeat, just because they feel that there's too crowded. Just many investments are way too crowded. The public equity markets have been down for a long time. The interest rate on deposits is low. I mean, people are just chilling out, really. There's a saying that people are just lying flat. They're just not doing anything at all.
Young people, that's saying.
And
And
a lot
everyone.
of older people too.
Yeah.
A lot of older
Yeah,
people
sure,
too.
but
40 or 50 years old,
Yep.
people.
Oh yeah. And yeah, I'll weigh in a bit too. I mean, maybe I'm a little more bullish, not that I'm a finance person at all, but I feel like I have a lot of friends in China and a fair amount of family, and I'm in close touch with them. One of my friends is general counsel for Lee Kum-kee in Hong Kong, and he lives in Guangzhou, commutes to Hong Kong during the week, and then comes home on the weekends. He's very savvy, and he's smart enough to know that things are good, but he's skeptical of the government, just like we're skeptical of our government. And he has a really kind of grounded view of his future, and he wants his son to study in the US. I think a big part of it is the schooling in China is so intense, and so many kids struggle to get into college, let alone get through high school. My niece is trying to get into high school now and struggling to do that, may have to go to an international school. So I think many Chinese want to send their kids to schools that maybe will give them a different point of view and doesn't put them through that ringer. But on the other hand, quality of life for many of the people I interact with isn't bad at all. Food is cheap generally. It's easy to get around. There are strong connections between people just with kind of the culture in China and the collective culture. So I feel like, you know, there's always going to be doom and gloom. And it's like, how do individuals navigate through that in every scenario? How do you find the best opportunity for yourself? And how resilient are you? And how focused are you going to be on taking care of your parents as well as raising your children if you have them? And I feel like for me as a foreigner who speaks enough Chinese and a middle-aged white guy in China, I enjoy myself, but I don't live there year round. But
Okay. Well,
I'll stop there.
No, you're good. You're good. Thank you. Samir, you had your hand up for a while.
Yep. So this question is actually not about China or Germany. It's about the GCC, since you know, some folks brought that up. What if people's you know, so GCC as in, you know, Dubai, Saudi, so on and so forth. They're much smaller markets than obviously China and Europe. What have people's experiences been in trying to engage with those markets, right? So I've reached out to a number of folks in those geographies, you know, in Saudi and Dubai, so on and so forth, and it's pretty variable in terms of the response. So let's say the follow through that that we get. Like to hear other people's experiences and any suggestions on how you know, we can perhaps progress more business in that space.
Okay, all right. Let's have. I've sort of weighed in already. Anyone want to talk about their experiences in the GCC?
I can say something. So I've been working with Vision 2030 for the last how many years, and the problem with Saudi government or Saudis, if and where government is involved, is that you have to be very prepared for very quick changeover of people in charge. So usually 2 to 3 years from my experience. So the whole department can be just overthrown or changed or closed. So how to navigate that is very tricky. And also in terms of promises and in terms of agreements and contracts, etc., it can be changed throughout as well. So, and nothing just stops them to just close everything that they started. They already invested some money in. So it's all about really nurturing that relationship, and it's not very Western way of doing things is becoming, but it's less and less. I mean, less and less, more and more is becoming, but it's still old school way of doing business. So to make sure that I reinforced what we already agreed, I went the other way, which is through British government. So, and now, they helped us to become, for example, one of the main suppliers for NEOM projects, etc. in the future. So it's just how to navigate that. So I think you need someone from the government as well to get your government. I don't know where you're sitting, but someone help that. That's my.
We hope that, again, it's about relationship change. We're developing ours, Samir, and hopefully we can all benefit from that. It's going to take time. But yeah, it's like I was gonna go to Asia and I was gonna skip Japan because it takes too long for me. But really what you need to do, I thought rethought it. Other people are saying they're coming to us, we're anchored by this JPEG and with this, they're like, oh, well, you've already done all that. Well, let's partner with you. So we just got to find people that have those relationships and partnerships and create the change together. Does anyone else want to weigh in on GCC? When we talk about Germany and we talk about China, that they have such an interesting role.
Mhm.
They have some optionality for themselves. We talked about Taiwan a little bit a couple of days ago. I don't know if anybody wants to. When you talk about China, we'll talk about Taiwan. Anyone?
Dieter's hands up.
Dieter, go ahead, Dieter.
Dieter,
You're on mute.
you're on mute.
I want to give you a little background about what's happened in the last 2 days. If you don't follow in Germany, there was a big meeting with our new Chancellor Merz, which was very. So the business people had been very optimistic when he gets in. And as you know, he worked for, I think, for BlackRock before he went into politics. And so they announced yesterday, they called it Made for Germany, not made in Germany, made for Germany. So 61 top CEOs of corporates have met and decided, or this announcement, 631, I don't know why they put the $1 billion investment until 2028. Most of this investment was already in plan. And when you look at the companies who are there, there's the least innovative company in Germany. That's the car industry, that's BASF and Bayer and Siemens and whatever. So they are not job creators in Germany. They are losing. Yesterday, Opel, that's the General Motors of Germany, announced they have to lay off 10,000. And then the interesting is there was no Mittelstand, that's a SBE, which is 99% of our companies in Germany. They are innovative, family-owned, small machineries. They have not even been invited from Merz to this meeting. The whole startup community have not been real invited. They are real not happy what's going on with energy and with all this investment because it takes forever. So even for the outside world, it looks, wow, $630 billion investment from this big Siemens and whatever. That doesn't bring, from our point of view, where we are living in family office, nothing. That was not very positive. For
And at the same,
they interviewed a lot of companies and they have been said, okay.
And at the same time, AstraZeneca just announced a $50 billion investment in the US following another Roche $50 billion investment. So that's the problem, is you can't have big capital flowing out and solve the problems that they have domestically. And that's Europe has a flow problem right now, and it's going the wrong way. And the problem with money is it follows money in and out, and it's going out right now. It's a tough spot. Samir?
Samir's back.
So just a point to support Dieter. I've had the same experience in both Germany and the US, right? Which is that so in Germany, so I was in Germany, I studied there at Siemens, and I speak fluent German as Dieter knows, and so on and so forth. I have a lot of relationships there, but what I found very difficult was to actually sell into Germany, right? So there are plenty of people in Germany who will sell to me in the US, but there's very few people who will buy from me, from the US into Germany, number one. Number two, it's all big companies, as Dieter mentioned, right? And it was the same here, that even during, let's say, the Inflation Reduction Act before the current administration, we had the big hydrogen hubs here in the US, which had immense amounts of money allocated to them before it got taken away in the 1BBB. But it was all for big companies, like all the little companies and all the startups and all the family offices are just left out in the cold, right? So the only people who actually go to get to go into the rooms are the guys at the huge companies anyway. So I think this is a pattern I'm seeing in most of these economies. I've heard this about China to an extent as well, which is that literally if you show up with, offering 100 million, they're like, yeah, we don't care, so, tell us about $1 billion that you're going to put in or whatever. So the point is that this is all big, big boys games, literally. And I guess the question is, how do we sort of help with the middle market, right? The Mittelstand, as Dieter pointed out. And then the startups and the entrepreneurs who actually have very innovative technologies and very interesting sort of niche propositions. But what I'm seeing in all these different geographies is that people are shying away from that, and they're still going towards, they consider it a success when some big company does something. That's not really where the win is anymore. It's the win is in all these small innovative things and the family offices and the people who are actually pushing the envelope.
Yeah, I only can agree. And when you look at the fastest growing startups or a tech company, I would not even consider them tech company in Germany, the unicorns. One is Zalando, that's a dealer for shoes, online retailer for shoes. That Flixbus, which is now in the US, they do buses and have some kind of stuff. And then you have other companies, not real, AI. There's only SAP, I would consider a global tech company coming out of Germany. Since then, there was nothing happens. And if they get bigger, then the US company, private equity is coming over and buy them out because they can't raise the money. So the VC investment has been down 50% compared to last year.
And why do you think that is? Because I think a big part of it is the energy policy. It makes it very difficult for them to even want to put money for outside money to want to support it right now. What's your take, Dieter, on why money's not coming in?
The returns are so low. If you're a family office and make more money with traditional, stocks and not in. So look at the VCs, and that doesn't matter if it's a late stage VC and early stage, the returns are very low, compared to, and they are not risk takers. When it comes to maybe they do a seed round, maybe an A round, but then when the real money comes in the B, C, D, then they have to go and ask the US VCs or big family offices. And the rich German families, the Quants and BMW and the Aldis and the Lidls, these are all retailers. They are not mostly investing. Schwarz is a little bit doing AI, but they buy real estate on Mallorca, and they have wineries, and they whatever they do. It's not like here, we have no Apples, we have no Nvidias, we have no, I'm American now, but they in Germany and Europe. It's a shame.
It's tough to see, having worked for Deutsche Bank, I think one of the issues that's really impacted Europe is after the great financial crisis, they didn't recapitalize the banks the right way. And they've always struggled since then, I think, to really get things moving. And you got to have a good financial system to get the lending going. And the works are gummed up right now. It's a shame. Other thoughts or comments or questions? Not sure. Mark was here a minute ago. Mark, you're still on. If not, thank you guys very much. And
Stephen,
yep.
There's a woman, Anita, who has her hand up.
Oh, thank you. Ask away.
Yeah, I think particularly in Europe, one thing we have to take into consideration of creation of new industries is a draconian regulation already hitting AI. So it's impossible to drive a great company which is building anything in AI out of Europe, period, because you just cannot. And that is literally what's shaping the next set of several industries across, from space to manufacturing to food, agriculture. This is huge. The next multi-trillion-dollar industries are getting born, and I think Europe has basically shut themselves out entirely because of the 600-page ridiculous document they've actually drafted. Because when I went through it, like I said, how can anyone build anything in a digital first economy mode? This is, I think, where Asia is so well positioned because they're so pro when it comes to technology advancements, also through the entrepreneurial channels. So I'm kind of curious to hear if you were compared the new industries that are just kind of emerging, Asia versus even Germany, since the today's topic has been China versus Germany. Like, how do you even see? Is there even a way out for Germany at this point?
That's a great question. There is a way out, but it's not easy, and it's going to take them to. It's going to take Germany to have a rethink of how they work, not only inside Germany but inside Europe. I think Europe's one of its biggest problems is they can't get the scale of being a part of the union when they act as individual nations still. And it's hard to grow companies to scale, and therefore it's hard to grow the economies to scale and get the benefits if you're fragmented the the way they are. And so I think regulation is a part of it. I think longer term planning would have been quite helpful. I think the idea of the energy transition is the best example of a ideologically based decision that didn't have a practical plan with it. That I think has put the German economy at a huge disadvantage that will be a problem for a while for them. So they have to have better planning. They have to balance practical policies to affect transitions. You don't do it on a wish. You have to have a time horizon, which I think that's what China's strength is their ability to look to the longer term. It's hard to do that when you have elections coming on a regular basis. So they have to get more consistent in their policy and more long-term in their policy to make the right investments to get out of the problem. I think releasing the debt brake is a big deal for Germany. I think it was way too late. If you think about it, you just wasted a 15-year opportunity of 0 and negative interest rates to make investments. If they released the debt brake, then you could have taken long-term debt and financed a lot of the things they needed to do to get their energy policy right, get their infrastructure up, do some of the other things they needed to do that they didn't take advantage of. So I think there are things they could do. Do they have the political will to do it? This goes back to, do you have strong enough leaders to bring the fragmented coalitions together to make it work? I think that's the challenge.
Thank you.
You're welcome. I think your point though on regulation, there's a regulations, we're in the most regulated business in the world in the US. Financial services business is extremely regulated, and we complain about it all the time, but it does serve a lot of good protections for consumers. It doesn't always get it right, as we saw with Madoff and other things. I think the idea of regulation, when you say deregulate, everyone thinks you're going to be a cowboys again, and I think it's just finding the right touch is really important. I think they went too far before. Leslie?
Yeah, yes, quickly. It might be a big question for the end of your forum, but there's a lot of meetings that are planned ahead of a potential meeting between Putin, Xi, and Trump in September. And I'm wondering what you envisage, policies might be in terms of Russian crude and that's purchased by China and India, and whether that is going to get worked into tariff policy or if it's just talk.
It's interesting because I think China gets a different playbook for tariff policy than everybody else because of their size. So I'm not sure how that plays out right now. I think China will tell the US what they want to hear and keep doing what they want to do, would be my base case of what the Chinese policy is going to be. They'll throw some bones, and I think the US, it wouldn't surprise me if the US and China work towards a what they'll call a trade deal. I would call it a temporary détente, and not really a deal. I would expect that's more likely. I don't know what's going on with Russia and Ukraine. I think our policies towards that have been misguided. I think Russia is getting very aggressive there right now and increasing their drone attacks. So I think the US pulled back at the wrong time to get a deal done. But that's for another call, another day.
Yes, thank you.
You're welcome.
Anyone else? Well,
thank you all.
Yes,
Till
thank
next
you.
week.
Thank you. Until next week. Much to talk about. We'll have some deep dives next week. Thank you.
Thank you, everyone.